This is your host, Caitlin Cook, and welcome back to the Dead Kate Bounce experience. In this week's episode, I spoke with Dante Disparte and Alex McDougall. Dante Disparte is Chief Strategy Officer and Head of Global Policy at Circle, responsible for overseeing company strategy, communications, policy, and public affairs. Since joining Circle in 2021, his leadership in driving market expansion, regulatory engagement, and more have been integral in furthering the company's mission to raise global economic prosperity through the frictionless exchange of financial value. Prior to joining Circle, Dante served as a founding executive of the DM Association, leading policy, communications, membership, and social impact. He also brings 2 decades of experience as an entrepreneur, business leader, and global risk expert, most recently as founder and CEO of Risk Cooperative. He also served as an appointee on the Federal Emergency Management Agency's National Advisory Council. Currently, he is a member of the World Economic Forum's Digital Currency Governance Consortium and a life member of the Council on Foreign Relations. Additionally, he's co-author of Global Risk Agility and Decision Making. Alex McDougall is the CEO of Stablecorp, a Canadian fintech that achieved a global first by launching the first bank-issued stablecoin, along with pioneering the Stablecoin 2.0 model, and is leading new approaches to cross-border blockchain-based payments. In his role, Alex leads the company in all areas, including strategic direction, ecosystem and partner expansion, development, compliance, and overall business growth. Prior to joining Stablecorp, Alex was managing director at 3iQ, responsible for their venture and digital asset yield initiatives. Alex co-founded Bicameral Ventures, a venture platform focused on interconnected investing, blockchain, interoperability, data, and identity self-sovereignty, personalized AI, and Web 3.0. He's also the director of Big Shooter Golf. Alex started his career as an investment banker at the Bank of Montreal and led multiple projects and teams across BMO capital markets, including in fintech, M&A, and financial institutions. He sits on the board of directors at Balance Custody, is a CFA charter holder, and holds degrees in commerce, finance, and international business, along with a master's in accounting and finance. In the midst of what was the craziest and darkest week in crypto history thus far, in the wake of FTX and Alameda Research abrupt downfalls, Alex, Dante, and I took a step back to talk about one of the most critical and least sexy components of crypto today, stablecoins. We discuss what stablecoins are, the important role they play in a digitally native world, how stablecoins offer a cheaper and faster alternative to payment processing and international remittances, and more. We also discuss cross-border payments, the role that stablecoins could play for cross-border payments in crypto, and the work being done to make it happen. With that, please enjoy my conversation with Alex and Dante. All opinions expressed by your hosts and the podcast guests are solely their own opinions and do not reflect the opinion of the hosts or any of their affiliates. This podcast is for commercial and informational purposes only, is not investment advice, and should not be relied upon for any investment decisions. We are not recommending any securities or cryptocurrencies, nor is this an offer or sale of a security or cryptocurrency. All right, we've got a double feature today. Alex, Dante, welcome to the podcast.
Thanks so much for having us, Caitlin. We're excited.
Thanks, Caitlin.
Super excited for this one. Stablecoins in the midst of everything going on right now. So good to switch up the topic of conversation a little bit. I think it's helpful to, just in terms of context, always talking about, where you're coming from, your background in the industry, where you got to where you are today. And I guess specific to you two, both Alex, Dante, a little bit of a TLDR on the respective roles that Circle and Stablecorp play within the broader industry as it stands. Alex, we'll start with you.
Excellent. Yes, I'm a dirty banker, lightly and slowly reforming into this crazy space. Although it's it's a tough space to reform into a little bit right now. But no, so I was an investment banker at Bank of Montreal. Worked on their M&A team, their financial institutions group, their FIG team, and actually started a little crypto group there as well. And I come into finance from a very academic perspective, almost of, hey, there's people with money, there's people who need money, and what's sort of the bare minimum we need to do to connect the two to each other. And so you from an outside perspective, you look at traditional finance, and it's very sophisticated and very well-oiled machine. It's been doing it for hundreds of years. You kind of lift up the hood, and it's a lot more manual, a lot more inefficient, a lot more monkeys on typewriters than you'd think. And so digital assets kind of held a potential answer to actually solving these like trillions of dollars of frictions and legacy costs that are stuffed and sort of hidden down the well of our existing financial system. So I started a venture fund in 2018, focused on kind of full stack investing all the way down from like layer zeros to what grandma and grandma co would touch at the top end, and really focusing on building out a bunch of the infrastructure in the middle, such that a mobility expert doesn't need to be a blockchain expert to build a great blockchain powered mobility app. Those types of connectivity. And really, a lot of the lowest hanging fruit is around finance. It's around fintech. It's really the easiest stories to tell in this space are a lot around financial applications. And so stablecoins and sort of those bridge technologies of yields and front end and all of those pieces were sort of what naturally drew me deeper into the space. So we started Stablecorp in 2019. We launched a Canadian stablecoin, and then really have just been building more and more infrastructure around cross-border payments, around multi-currency yields, around the front end that makes it look, act, and feel like a bank account. All of those things that make it easy to engage with the space, with which we love to build with our good friends and cross-border partners here, Dante and the Circle group.
Yeah, on that note, we'll pass it over to Dante.
All right. Well, Caitlin and Alex, it's good to be with both of you. So I'm on, I guess, the southern side of the border, even though we argue that Circle is headquartered on the internet. So we have no form or function other than internet scale payments. But, to sort of address the question, Caitlin, that you asked at the outset, I think one of the reasons the stablecoin topic has been so evocative and has drawn the attention of policymakers, regulators, bankers, and everybody else in between is because of all of the innovations in the digital assets economy. It is the most likely to be in the hands of eventually billions of users. And so Circle is coming at it from that lens, building for the long term and trying to keep true to the very first word in the term, stablecoin, trying to be a stable operator in an otherwise uncertain global macro environment, and frankly, in an otherwise uncertain digital assets economy itself. And so USDC is Circle's core innovation. It is a dollar digital currency. We actually do not like the term stablecoin. As a category term, it's a little too generic, frankly, and it includes in it assets that are anything but stable, as we have seen not long ago, and I'm sure we'll get into that. With examples like the Terra Luna collapse and things like that. So our innovation is one in which we're solving for the original buyers and spenders remorse that people had when crypto came onto the scene 14 years ago, in which an asset that eventually appraises in value too quickly, like Bitcoin did, or potentially declines in value, is not a great medium of exchange and payment instrument. And so the stablecoin was meant to solve for that. I call original sin in the crypto economy, which was that buyers and spenders remorse was very real with Bitcoin once upon a time, and so the stablecoin has emerged as that kind of like solution for economic stability in the market. And so I'm Circle's chief strategy officer and head of global policy, but the company is, I like to say, the American Stablecorp.
You beat my line to it. Amazing.
Yeah.
And just to build on that, I think we've actually taken a lot of inspiration and innovation from what Circle's built around. Hey, there's an amazing set of use cases that can be accessed via using digital asset technology. But a margin-based business is never going to run its P&L based on Bitcoin. Like, it just does not make sense. So, stable coins are almost that hack to adoption, if you want to call it that. Like, it's we don't know where the end state of what a digitally native digital asset will be valued upon. But we do know that in today's world, in order to access those sort of real fundamental value use cases, we need something that's worth $1. And I'm sure one thing we'll get into on the experimental things that are worth $1 sometimes versus the real things that are just pieces of technology on top of $1. That's kind of key to the industry. But where Circle's really excelled and what we've sort of partnered with them on a lot of stuff is building the machinery around it. Like a digital dollar by itself is not that useful. You need places to swap it, places to use it, places to pay it, use cases for it, ways to earn yield on it, all of those pieces around it. And I think sort of taking an ecosystem approach is really what both of us at Stablecorp and American Stablecorp are trying to do.
It's such an important point too, right? The interconnectivity aspect of it, because to your points, I mean, this is one of the first ways that most people will and most commonly will interact in this ecosystem, right? Something that is, maybe stable is not the right word, as Dante mentioned, maybe more stable, but it makes a lot of sense that this would be something that people are using on a more regular basis than anything else. I mean, anecdotally, I get paid in USDC and starting to kind of get more comfortable, interacting in that ecosystem, and stablecoins are what I use most for sure. So on that note, in regard to adoption around stablecoins, both from like US versus abroad from a global perspective and use case wise, where are we at now and where do you see, this going in the future from a I guess, user standpoint, if that makes sense.
Yeah, I mean, I'm happy to jump in there.
Yep.
And congratulations on being paid in USDC. That is a sign of not only trust, but a great example of user adoption. And so, my message really is watch what they do, not what they say, right? So for example, to pay homage to Alex's former world in banking, there's a reason why very large traditional financial institutions are taking kind of a long view on what the infrastructure represents. And I think all too often the crypto conversation tends to be a little bit short-termed in my mind, that is looking at the price movements of digital assets as opposed to the movements of institutional players. And so right now, there was a recent survey that highlighted something like 75% of all the world's merchants and payment networks have a crypto acceptance strategy. And when you pierce through the headline, the medium of exchange for that crypto acceptance is ultimately a payment stablecoin. The legislation in the United States that's under review, and I think will be back on the docket in a pretty significant way now that the midterm elections are all but done, will normalize the so-called payment stablecoin as an innovation that is a part of the payment system that lives and breathes inside banking and prudential regulators and has certain standards baked into it that will then start to create a pathway for mass adoption of the innovation as a part of always-on global payments. And that's what we're starting to see as a company, Circle, very, very clearly evolving so that your use case of receiving, wages denominated in a stablecoin starts to become an option for consumers and merchants and retailers around the world. And that's what the stablecoin fundamentally represents, is a medium of exchange that is internet native, device centric, and allows for always on trusted financial transactions on the internet. So pleased to see that breakthrough starting to become a norm.
Yeah, and just to build on that, and I'll touch on the global aspect a little bit as well. It's very nascent to even see payroll to be done in digital assets, even in stable coins. And I think it's somewhat of a hallmark of the nascent status of the industry. I mean, Dante, you mentioned the payment processing or payment providers, and all too often it's a company saying, "Hey, you can slap on your website that you take crypto in 70 different things, but don't worry. You'll only see your nice clean green dollars in your bank account. You don't need to worry about any of that stuff, and we'll charge you 3, 4, 5% in the middle." It's sort of up to us as an industry to, okay, even if it is a stable coin that you're getting settled in, then, Caitlin, I'm sure you mostly go and off ramp with your stablecoin and go and pay your rent in US dollars and kind of do your usual transactions. And that's still kind of the norm. I think we've gone one concentric ring out from, okay, I get paid in Bitcoin and I immediately swap it into US dollars and go, and we've sort of locked in value in a medium of exchange like a stablecoin. But it's really up to us as the industry to build that next leg out. We're like, what if, crazy idea, I don't go to fiat, but I continue to start paying and continue to do these things with my stablecoins. And a lot of that is giving you sort of bank-like functionality. Can I pay bills with this? Can I earn yield on it while it's at rest in a trusted and transparent manner? And a lot of that stuff is sort of infrastructure. And where we get to with a lot of the cross-border piece, because domestic payments and obviously you guys are more US centric, they're not great, but they're not the worst. Like paying kind of in the same country, ACH or e-transfer in Canada, it's certainly not instant. And I think we all know how the actual banking system settles things, T plus whatever, even in sort of domestic payments. But it's not the worst. It's really where you get that cross-border stuff where you start to stack on T plus 2 plus T plus 2 plus T plus 2, and you start to get those baked in FX fees from when you're sending wires. And you start to get those T plus a million settlements, and you're losing 7, 8, 9%, especially when you're getting into the more esoteric currencies. Like that's where those 95% plus friction removal fee or costs or savings are. In kind of creating this globally on-chain web of commerce. And so when, right now, there really isn't kind of an international stablecoin market. Like it's starting, and Circle's taken some big steps towards that with EuroC and some of the other steps they've made in Singapore. We've built the Canadian leg of that, and there's a few other good stablecoins in South America and a few in Europe as well. But even the infrastructure around connecting them, on-chain FX, the atomic swaps between currencies, where people don't have the capacity to pay massive friction fees or the willingness to deal with crypto weirdness when you're just trying to make a payment. That's the type of infrastructure that's sort of kept us to the only people who are currently willing to go on-chain native are the ones who are familiar enough with the technology to be able to kind of look past the clanks and deal with the weirdness stuff that comes out of it. So I think a lot of the stuff that we're building as financial technology and infrastructure providers right now is that it's that boring stuff. It's just swaps between currencies, stuff that we've done forever and ever and ever. That isn't that esoteric or isn't that kind of life or idea changing. But it's game changing in sort of a quieter but more impactful way. And so I think when you look at all of the stuff you can take out of the middle of that global financial system and replace that with a really, really efficient, transparent, liquid, proper, decentralized peer-to-peer currency swapping network. And then sure, you'll still have fiat layered at the edge like we do today, and we can evolve in that and all that fun stuff. But that to me is where that sort of 0 to 1 moment is, when you can start to really get past a lot of that correspondent banking stuff. And that's a big part of what we're trying to work on with Circle. I mean, the Canadian-US border it's a huge cross-border commerce corridor. It's a great place to start, and there's a lot of sort of low-hanging fruit to tackle there.
The infrastructure part is so important too, right? And as you said, I mean, it's not the sexiest thing in the world, right? But in terms of actually taking a financial innovation and making it really accessible and using it to the fullest extent, it has to be there. And there's a lot of considerations for that. So even going back, and I think it was Alex wrote about this as well. You look back to the original Satoshi white paper, right? And what crypto was intended to be originally. International digital payments infrastructure taking aim at cross-border fiat flows, right? Again, that cross-border aspect is huge. And I think that there's still quite a long ways to go. And, obviously you two are both working on that and can speak to it better than I can in terms of making that truly accessible and borderless. And I do think you mentioned, stablecoins in more of in their purest form, right? But I think I'd be remiss if I didn't ask about more of the experimentation that we've seen in the space, just because again, stablecoins, I think, are very underestimated by a lot of people with all of the other, crazy and more out there things being built in the space in terms of utility and how often they're going to be used by people around the world is monumental. But let's talk a little bit about where people have steered away from maybe the base cases that you talked about for what stablecoins should be and how they should be used. I'm thinking the Terra Lunas of the world and algorithmic stablecoins in general, but curious to hear your thoughts there.
Yeah, I'll take the first pass at that, and I think that honestly, the message of the evolution in the crypto economy from a speculative space to a utility value space is really what's happening right now. That it does take the clarity of a Terra Luna blowing up, and it may, until perhaps recently, have been one of the largest uninsured and unfunded financial losses in sort of financial markets history. It takes the clarity of a moment like that, like it took the dot-com bubble, to hand over internet development to companies and developers and businesses that had a view on, real world impact. I think the same thing is happening today in this industry, right? That it's a blend of a dot-com moment plus the post-2008 financial crisis world where, this kind of boundary line around, what's the distinction between utility value innovations or core infrastructure innovations in global financial services from people playing sort of a short-term game. I think I remain very optimistic that, the infrastructure and the idea of what a payment stablecoin represents and the idea of what regulated business activities in the digital assets arena look like is in this process of convergence, that soon enough you will not be able to tell the difference between where traditional brick and mortar banking begins and technology ends, and vice versa. And that goes back to the survey sightings of 75% of merchants planning on accepting crypto payments. We see it already today, just as real world examples. The US Mexico USDC remittance corridor with Bitso is a powerful example of that. The work that Circle is doing with Stablecorp in sort of cross-border payments. In fact, you could argue we do not send cross-border emails. You send emails to trusted counterparties, irrespective of their jurisdiction or location. And I think over time, the idea that these innovations become normalized, then the real superpower of payments and economic activity on public blockchain infrastructure is a borderless activity in certain ways, but traded through trusted counterparties. And so to analogize it even further, I think digital assets and crypto needs sort of its correspondent banking model. And this is where companies like Circle, like Stablecorp, like Bitso have this implied, crypto NAFTA opportunity if the innovation starts to scale and starts to touch not just retail money flows and peer-to-peer money flows, but also commercial ones. And so I think across the board, around the world, something like USDC, by virtue of being built on open source technology standards, is available in 191 countries, right? A 5-year-old innovation in that same span of time has a correspondent banking network that is device-centric and in the hands of end users in more than 191 countries. That's a very, very powerful revolution in financial access, a revolution in programmable, composable money on the internet. And the more it starts to then touch commercial money flows and trade and commerce, the better and more efficient I think those transactions can become. However, I think it's also critical to acknowledge that you cannot make those innovations very big on the edges of being well regulated. And that's what Terra Luna teaches us. And that's what sort of a lot of the crypto correction today teaches us, that you have to walk through the front door with regulators and policymakers and build on foundations of trust, whatever the form factor of money, whether code or bills.
Yeah, and I think we've learned that lesson a few times in very challenging ways over the last 3, 4, 5 months. And it's sort of what we were talking about just in the preamble, Caitlin, of there's this idea or ethos in digital asset land of, oh, it's decentralized, oh, it's transparent, then regulation is less applicable to me because I'm you can see everything that I'm doing and it's all code, it's not me. Like there's a whole bunch of sort of arguments that fall on that. And there's absolutely experimentation, there's absolutely evolution in regulatory models, there's absolutely kind of novel thinking and interesting approaches that need to be taken to the space to getting your arms around it and from a regulatory perspective. But like, crime is crime and fraud is fraud, and leverage is leverage, and especially when you speed everything up and you reduce the amount of people who kind of really understand what's actually happening, which is kind of what's happened in digital asset world. You really kind of create a brew that needs smarter regulators, but still needs that sort of oversight. And if the one end, and I think this is where we'll kind of see some of the bifurcation going forward here, is we've tried this sort of hybrid model of these huge centralized V1 crypto players, and we've sort of gotten the worst of both worlds in many ways. So I think we will start to see some of the more basic, more boring shit that gets built during this like winter that's getting winterier on a daily basis here. But really, start to replicate and start to look a little more fundamental and traditional, but just give you those big cost savings, which is a great sort of V1 of adoption. But I also think you'll start to see that innovation sort of pushed even further into the future, because we have seen, and this is something that I think we're all passionate about, that because there's been bad examples of this, that does not mean to kill innovation, and it does not mean to stop experimenting, stop building in sandboxes, stop building this like full V2 or V3 or whatever version of like our economic structure that we're on. We just can't conflate the two. An experiment should not be $60 billion, but an experiment should be within a sandbox and have the appropriate regulatory structure around it and have people able to access it, and all of those pieces that have kind of built where we're at today. And that's sort of the biggest learning of Terra Luna and all of the other algorithmic stablecoins that have all universally blown up to date. But that doesn't mean we shouldn't keep looking for sort of stable financial assets that don't, create more efficiency, that create more ability to keep everything natively on chain, that allow us to jump further ahead. Like there is an answer out there at some point. I mean, ultimately, and this is something I've said a few times and always get interesting responses to. The US dollar and the Canadian dollar are basically algorithmic coins. There is an algorithm that lives behind it for when we're creating more money, how we're doing with interest rates, how we're setting central bank rates, that creates the value of this coin. It's not backed to anything. It's not pegged to dollars or gold or anything like that. You might argue that it's backed by military, but ultimately it was a set of alchemy and a set of decisions and a set of decisions that made sort of the value that it is today, and it made the structure that it is today. And that was a much more efficient model than pegging it to an artificially supply value like gold. But it took a long time to do. It didn't go out overnight. It didn't sort of happen all at once. It certainly wasn't decided on Twitter. And so it's sort of that we've sped up the evolution of some of this stuff way too fast. And that's the cool part of crypto, because it's all machine speed. And theoretically, we can automate, everything. But when you automate, it's like building an Excel model. If you don't have the right cell linked up, when you make it fully circular, you get a billion hashtag refs and the whole thing blows up. So, we need to have those guardrails in place to be able to hit Control Z and go back an iteration and have the right regulations in place to be able to encourage experimentation, while recognizing like what's ready for prime time versus what's an experimentation of something that might pay huge dividends in 2, 10, 15 years as well.
It's such an important point too, right? Because again, all of the innovation that's happening in a space that's growing so quickly, the experimentation is going to happen. To your point, should be contained, shouldn't be $60 billion projects and whatnot. But the regulation does need to be there. It needs to be done in a way that's not stifling the responsible innovation that is in the works, right? And stablecoins are a really big part of that for various reasons that we've already talked about. But on a regulatory front, I'm clearly biased to the US, but curious from a global perspective in terms of regulation, because everyone's always asking about regulation. What is the current state of how stablecoins specifically are seen through a regulatory lens, both in the States and abroad?
I'll let the king of Micah start.
Yeah, I mean, again, partly because of the stablecoin is the most likely innovation in crypto to be used by everyday consumers in everyday ways. It has been the most evocative, and so since 2019 and the introduction of the once Libra project, later rebranded, later failed, there's been a pretty consistent global policy conversation that's now starting to result in actual legislative proposals and actual bills that are not only being debated hotly here in the US, but the entire body of law that the Europeans have proposed was a market reaction to the emergence of global stablecoins, as some are calling them. The Europeans are effectively putting the stablecoin category into electronic money, which goes to, I think, a lot of the points that Alex raised, that, this is an innovation in the payment system and as a part of sort of constantly upgradable financial markets infrastructure. And so the Europeans, under the markets and crypto assets framework, which I joke will be to crypto what GDPR was to privacy, will fall into a regime like for like in terms of the activity around electronic money and the movement of money. Other jurisdictions like Singapore, where Circle recently received in principle approval as a payment systems operator, a major payment system, will be sort of equally regulated in a jurisdiction like Singapore. And here in the United States, I always take a little bit of umbrage on behalf of the state's banking and payment supervisors, where Circle is regulated equally to traditional payments companies like PayPal and Stripe and Apple Pay and so on, that if the sheer number of licenses held is a proxy for being well regulated, then we're amongst the best regulated companies in the market. What is missing is a federal pathway that I think will be closed relatively soon as a part of legislation that, candidly, things like Terra Luna and the broader sort of turmoil in the crypto markets lend urgency to, will eventually have federal clarity as well. The United States is alone in the advanced economies in not having a payment system charter or a non-bank pathway to be an electronic money issuer and money operator. And that's a gap that we have from a global competitiveness point of view. And I suspect we will close that gap. The stablecoin is the pathway to close it, but the implications are bigger. It's about fintech competition in banking. It's about sort of rules-based approaches in this space. And so my suspicion is we will soon as 2023, have regulatory and legislative clarity in the US on the edges of where it's missing, and more a matter of competitiveness than anything else.
Yeah. To build on some of that, I think the intelligence of the sophistication of the regulators in this space has increased exponentially in certain pockets in the last 18, 24 months. And Dante, to your initial point about stablecoins being a misnomer, this is one of kind of the biggest pieces of it. There was a lot of education required in the aftermath of Terra Luna around, this is that. They are extremely different. One is a set of experimental math that happens to equal $1, and one is $1 with a thin layer of technology on top of it. And so a part of it is even just sort of breaking down those types of misconceptions. And I think it's been both helpful and not helpful having kind of international banking legislators, so the Bank of International Settlements, things like that, being somewhat ahead of the game. So the BIS rules that came out and some of the initial BIS guidance on crypto, was well in advance of sort of anything formal from most bank regulators. And that it wasn't particularly evolved thinking. Like Bitcoin was basically, you if you hold it on a bank balance sheet, it's atrocious for your capital efficiency. You can't use it as collateral. A bunch of thoughts that weren't necessarily with where we would hope that they would get to. But they did create this category of tier one assets, which are, they call them tethered assets, which they're basically the construct being, it's all about how you construct these assets. And if you are presenting them as cash equivalents, as long as you build the right infrastructure such that the cash is actually equivalent to them, then a bank can hold them equivalent to cash. And I think that that general construct helped local bank regulators and help local regulators as a whole get a little bit of a bigger handle on sort of, okay, the globe is sort of all looking at this roughly in the same way. I think the securities regulators, that's a somewhat of a different kettle of fish. Like I can speak for the Canadian side a little bit. So if it's a bank issued coin, like one of the coins that we're working on, then it is a business of banking instrument. It's they're well within banks' rights to do it, and that's sort of explicitly outside of securities law. It's relatively black and white and easy to get ahead. The whole other host of things with bank issued coins around where they can travel, all of that fun stuff. But from a securities law perspective, there's some root there. With more privately issued coins or technology company issued coins, there's a whole host of opinions and thoughts and interpretations of how this is or is not a security. And I think most of them get away from the fundamental point of this is not trying to be a security and this is not trying to solve things that are securities like. And if you regulate it as a security, you're effectively killing the market. And it doesn't necessarily fit those kind of same prudential regulations that securities legislator is trying to solve. So I think when Dante is talking about being regulated as a payments innovation and looking at it as a set of technology that evolves the current structure for moving these offline dumb dollars around, that's really the way that we should be looking at it. And I think regulators are starting to get a little bit smarter about it. In some cases, in certain jurisdictions, they're getting a lot smarter about it. So Canada just launched a consultation over the next little while, at very early stages on our end. Our banking regulators come out with a little bit more guidance around it. But it's sort of in fits and starts across the globe where the regulators are heading next with it. But I do agree that, hey, this is the lowest hanging fruit. This is probably the easiest to understand and get our heads around from a regulatory perspective. So it makes sense that they're starting it.
Definitely. And talking about it again from like a global perspective, I do want to sort of set the scene for discussing what you guys had alluded to already around the idea of a crypto NAFTA and, cross-border payments. So when it comes to the role stablecoins could play in those cross-border payments, and you've mentioned some of this already around infrastructure and whatnot, what does an ideal of structure for that look like, and what's missing today?
Yeah, I'm happy to jump in there. And I think, look, the starting point is, do these innovations replace existing ways of moving money, or do they augment them? And so it's worth starting at what is the current option. And something as simple as a global peer-to-peer payment or remittance, if you haven't processed one anytime soon, I would sort of invite anybody who's listening to go do it. First of all, try to find your nearest MoneyGram or Western Union location. And you probably end up at a 7-Eleven somewhere in a city to fill out forms in triplicate and sort of find the destination to send the money. And so it's an incredibly inefficient way of moving money around the world. The same would hold true for commercial transactions and commercial trade. I used to, in a former life, run a global automotive logistics company, and to ship any good via traditional commercial means around the world is to subject yourself and to subject your business to the global correspondent banking system, and letters of credit, bank guarantees, irrevocable letters of credit. That entire business model, in my mind, hasn't had a systems upgrade since the 1700s. And calling correspondent banks to see if a company and its bank guarantee actually have sufficient capital to release goods at a port feels very, very antiquated. And so the utility value of blockchain-based financial services, where even two counterparties that don't necessarily know each other can have the same version of the truth and the same reference ledger that shows whether or not funds are in escrow, I think is a very, very powerful tool. And one of the reasons, frankly, major banks like JP Morgan and their team at Onyx are contemplating what would the JPM coin innovation represent if it could be normalized in traditional cross-border banking and payments. And it's just a more efficient way of contemplating that use case. And so you could envision a world, I cannot wait for the world in which you no longer talk about blockchain or crypto as the technologies, but rather the technology stack fades to the background and the foreground becomes the outcomes that markets and people are looking for, which is better, faster, cheaper settlement of financial transactions. That's what this innovation is all about in the first place. And the more candidly we can get regulatory clarity and harmonize that regulatory clarity, the more that utility value becomes the story, as opposed to crypto loses $1 trillion, speculators are wiped out, consumers are harmed. I do think it's really important that not only the industry looks at itself in the mirror, but the regulators and policymakers do as well. And my general admonishment to all of them is hurry up and wait is not a great strategy. But getting to the utility value phase is next. And we should be very encouraged by what that looks like. The last quick point is we should not forget, to Alex's point about dumb dollars, the real breakthrough of stable coins and digital currencies is the idea of programmability and composability. A lot of what takes place in sort of advanced financial services is humans are the programmers and are the program. And so you have to rely on the trust of thousands of people and a lot of bank overhead and Wall Street overhead to conduct activities that can otherwise be enshrined in code. So a bank guarantee can be evidenced and escrowed on a public blockchain, and that when goods are received, the public blockchain is liquidated and the payment is liquidated. That whole world of programmable money, zero default lending, low cost, instant cross-border payments and the like, I think we've seen green shoots all over the world of these examples kind of emerging, but to normalize them to address trillions of dollars of global trade and commercial trade implies that across those borders, the digital asset enjoys like for like regulatory clarity and harmonization, rather than one person's payment stablecoin is another country's e-money token is a third country's banned digital asset. And so we do have to live within the world that we live in today, despite the fact that the technology is already ready for prime time.
Yep. So yeah, I mean, remittances are basically any innovation in them right now is fake. Usually it's a bunch of assets sitting on both sides and never actually crossing the border. And then a front end being like, look at all of this cool efficiency that we've built here. And that's really how we've kind of solved the correspondent banking system, is just bigger balances, more obfuscation of the challenges that exist currently. And so I think to make it a bit tangible, like what we've kind of structured to build with the Circle team right now is, so a Canadian business onboards with our front end. One of the things that we're very passionate about is this idea of KYB sharing and sort of multiple onboarding. So the way we're building it with the Circle infrastructure is, they onboard with us. We know what the Circle requirements are for onboarding. We're basically matching it from our client's perspective, having sort of a back end process with the Circle team whereby we can seamlessly onboard our clients directly with them as well. Have the Circle infrastructure serve as the end leg of that digital asset transaction and the local regulated side of the house, so that digital correspondent banking structure that Dante mentioned, and then have FX service providers, whether entirely on chain or at least centralized, but using native crypto swapping, to go from the Canadian dollar stablecoin into a US dollar denominated stablecoin in real time and instantly settled. So you don't have to get a quote, send fiat money, have it settle maybe same day, probably next day, have the FX company go around, send it back to you, then send it out somewhere else, each of which has that sort of T+1. So when you're paying a bill in America from the Stablecorp or Grapes account in Canada, you basically enter in where you want it to end up. and choose whether it settles in USDC or US dollar fiat as governed by the Circle infrastructure in the US. You reach into an FX provider that's giving you real-time quotes because they can real-time settle, pull out that FX rate, get your Canadian dollar rate, either pay it with stablecoins that you already have, or click it and then reach into your Canadian bank account and do a pull for that C dollar amount and convert. And basically you can have a US dollar settled invoice that the transaction costs are domestic rails on both sides. So it's ACH on the end and e-transfer or whatever on the way in. A liquid US Canadian dollar stablecoin FX swap that's really where the innovation needs to be on a lot of those FX pieces. But you can have real-time settling, real-time quoting, real-time actual FX rates, and basically have instant settlement into the US structure and out. That's kind of the dream of something that if you have a supplier in the US that has no idea about anything to do with crypto, all you need is their bank account and our user's Circle account. We kind of manage all of this stuff on the back end, but it's all in your name. It's all transparent to you. You're clicking 3 buttons and then the digital asset rails are creating the rest of the magic for you. And you look back at your statement at the end and if you're doing it on low cost networks, that whole thing, if you're getting good FX spreads, can cost you 5 bips and 0 transaction costs versus wires, time, FX, all of those things baked in. And so it's like 95% cost savings. Like that's what's going to be the, oh, of course I should do this versus maybe I should, maybe I shouldn't. Like that's really sort of the tangible outcome of what we're trying to build here.
So my biggest question on all of this too, and not even specifically talking about the US and Canada only, but just global stablecoin market, global crypto market, so much of the adoption of crypto broadly has been outside of North America. In fact, it's been pretty much everywhere else, right? So, but I think even maybe something you wrote, Alex, 94% of stablecoin market cap is in USD. And one of my big questions is more around if you're trying to improve kind of the cross-border payment part of this, and you mentioned a lot on FX, how does that work, right? I mean, how do we build out a market of stablecoins that aren't primarily USD denominated to really encompass and represent more accurately kind of the usage that we've seen at a global scale?
Yep. Go ahead, Dante.
I was going to say, I mean, so you're right on the one hand that there is a void in the world for alternative currencies to be represented in the digital assets economy. But at the same time, the reason the dollar is the currency of reference in digital assets is because, at some level, if you're creating a digital twin through the process of issuing a stablecoin of the real economy, then it would stand to reason that the digital economy would find its parity in representing the real world. And so the dollar globally is the reserve currency of the planet, especially today in a market environment with so much economic uncertainty and macro uncertainty. It's not surprising that dollar-denominated stablecoins are growing and or represent sort of the lion's share of how crypto is being priced. But we do see a need and a void to be filled for representing alternative important global currencies as well. Circle, for example, has launched a actual euro-backed stablecoin. There's others in circulation, but we think equally to what we've done with USDC. There was always a void for trust, transparency, and accountability in referencing a digital banking system. So Euro stablecoin, which is on course to becoming the largest Euro stablecoin in circulation. So therein lies, I think, an implied on-chain FX opportunity that can create more efficient markets and sort of a digital asset that can denominate one of the second global sort of currencies. The question of then how do you roll out that operating model and that business model to represent other currencies? And then the next question, I think importantly, is given the type of prudential management and banking risk management that you have to follow, which currencies become good candidates to become privately issued stablecoins? And then the next threshold question down the line is then how do these innovations potentially operate and coexist with the potential emergence of central bank issued digital currencies and so on? And so we're trying to maximize for interoperability and maximize for use cases that support the world, as opposed to single operators and single entities and single currencies.
Yeah, and agree that there's a reason the U.S. dollar stablecoin market emerged first, and has kind of continued to be the largest. Like it's back to my point before of it needs an ecosystem to work within for a stablecoin to matter. You can't solve one leg of a transaction if you just need to jump back into fiat. You're ending up creating more of the more friction than you're solving with the Canadian or with any currency stablecoin. And so it's an evolution to get the infrastructure sophisticated and smart enough in order that there is obviously a gigantic FX market that exists in the world, despite a lot of the currency and dollar global economy running in US dollars. And so to get the FX market or to get the digital asset market far enough along such that the on-chain FX piece is a natural next step. I think that's where a lot of the work has been going in the last, particularly in the last kind of 12 months, as we need more and more of these types of cross-border commerce. And I think it's a good example is international exchanges that offer sort of $C trading pairs to local users, or offer whatever dollar trading pairs. All of that liquidity is backed onto US dollar denominated liquidity across sort of the digital asset trading world. But the FX markets in the world only operate 9 to 5 on Monday to Friday, or at least from the bank piece or the bank side that you can access it. So if you're running a book domestically that trades 24/7 and you're only able to access FX markets on like a bank schedule, you end up with major currency mismatches. And that's a huge problem for people who are operating in different local denominated currencies. And so like those types of on-chain FX where, okay, now everything can trade 24/7 in a bunch of these markets, like that, there's a huge opportunity there to take out frictions kind of globally. And sort of right now we have the US hardcore of the stable coins, and then all FX being pushed out to fiat side, which places burdens basically on the local and domestic currencies, which is fine in some ways, and it's a great start. It's a great way to begin adoption. But if you're looking for those like 95% value savings and sort of creating this two-way flow into and out of the US and some of the major currency partners, you need that to be sort of, it's almost like fiber to the curb versus fiber to the home. Like you need to have that stable coin to the home type of connectivity at the end as well. And a lot of that relies on local partners. A lot of that relies on local banking systems. You're to your point, Dante, of you can't be swapping from what's a known and regulated stable coin into an unlisted security and at the endpoints, and like that doesn't work when you don't have sort of regulatory connectivity. But that really is sort of up to us as the industry right now to build those last miles and to build those connective fabrics at the endpoint of all of this American dollar liquidity. And I think if we can sort of think about where our next steps are, obviously we built a bunch of this stuff in Canada, but a lot of it's around connectivity to the US. Then there's a ton of jurisdictions that have their major trading relationships with the US that still struggle and suffer from similar types of frictions. I mean, Bermuda is a great example. Fantastic digital assets country. A lot of it's denominated in US. A ton of the trade and volume goes back and forth. And they do have some things in their own Bermudan dollar as well. But there's a lot of kind of those types of currency where you lose some of the value and specialness by not having digital assets all the way to the end. And so I think that's sort of our goal and job as an industry is to sort of build that infrastructure all the way out.
So wrapping this up here, for those who want to follow along with what you're doing, Stablecorp and Circle on crypto NAFTA, anything else really as well, what are next steps and where can people follow along with that?
Sorry, go ahead, Dante.
No, I would say, I mean, I do think, there is a Cambrian explosion despite the news, despite the headlines, and despite the big short of this industry. There is nonetheless a Cambrian explosion in population scale access to device-centric, trusted, well-regulated financial services. And trusted, well-regulated companies like Circle, like Stablecorp, and like others will emerge as the biggest winners of an otherwise complex environment. Don't take my word for it. The number 2 person at the Bank of England, Sir John Cunliffe, said the companies that survive this particularly dark, cold crypto winter will be the Amazons of the future. And at some level, that then would represent a world in which, trusted forms of instant payments that are device centric can be sort of enabled and empowered for consumers and markets and other participants around the world in trusted ways. And that's the breakthrough. Circle's unrelenting in that effort. And I know Stablecorp equally is unrelenting in that effort. And how this then plugs in to this broader idea of sort of an implied crypto NAFTA is more of a policy and regulatory opportunity than it is about what single companies can do. But we've started to see some examples of that type of demand already emerging.
Yep. And we put out an interesting announcement with a partner of ours, Sale GP, about a month ago around a cross-border payment for paying out a sailing racer in the US using USDC. So it's those types of use cases where we can draw a direct equivalent to what they used to do through the banking structure versus what they can do through this type of infrastructure. Those are going to be where we continue to really shine lights and draw ecosystem spotlights and really kind of tell that story. We're also looking to have more trading pairs that are well supported and liquid between multiple currency stablecoins. To be able to be accessed via API, to be able to be automated, to be able to sort of drive those transaction flows from end to end. So stay tuned for more and more smoothness in all of this fun stuff that we're building out, despite all of the chaos in the industry today. Like, it's as annoying and frustrating as this is, I think we are building the right type of infrastructure to do this correctly for the next leg of massive growth. And it's going to be the boring stuff that gets the job done. And Dante and I love kind of nerding out on a lot of this. And so it's a lot of fun to be able to tell it to the world and show some real value propositions and use cases.
Definitely. More smoothness on the horizon. I love to hear it. And I'll definitely be following along. Big fan of the work that both of you are doing and really appreciate you being on today. So thank you so much. And thank you to everyone for listening as well. All opinions expressed by your hosts and the podcast guests are solely their own opinions and do not reflect the opinion of the hosts or any of their affiliates. This podcast is for commercial and informational purposes only, is not investment advice, and should not be relied upon for any investment decisions. We are not recommending any securities or cryptocurrencies, nor is this an offer or sale of a security or cryptocurrency.